Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Merchants Securities Co. Limited, latest report. China Merchants Securities Co. Limited provides a wide range of businesses and services to its clients. At the core of their operations are wealth management and institutional services, which include trading in stocks and futures contracts. The company also offers margin financing and securities lending services, allowing clients to access capital and manage their investments more effectively. In addition to these core services, China Merchants Securities Co. Limited provides investment banking services, including financial advisory, equity and debt underwriting, and sponsorship. They also offer asset management and investing advisory services, helping clients make informed investment decisions. Furthermore, the company trades in a variety of financial products, including equity and fixed-income securities, derivatives, and other financial instruments. The company's services extend to market maker and alternative investment services, providing clients with access to a range of investment opportunities. Overall, China Merchants Securities Co. Limited offers a comprehensive suite of businesses and services designed to meet the diverse needs of its clients in the People's Republic of China. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the given data. On the revenue growth side, several key factors contributed to the increase in revenue. These include agency trading in securities of wealth management and institutional business, which grew by 29% year-on-year. Additionally, total revenue, other income, and gains increased by 13.04%, while profit for the year attributable to shareholders of the company rose by 18.91%. The growth in equity business, development of REITs business, and consolidation of bond business also contributed to revenue growth. Furthermore, expansion into key technology sectors drove revenue growth, as did the increase in market share in central and state-owned enterprises and improved integration of onshore and offshore investment banking operations. Bosra Fund's increased asset management scale, operating efficiency, and conversion of macroeconomic research into investment performance also contributed to revenue growth. Fee and commission income from agency services, investment consultation, and investment portfolio proposal grew by 39.81%, mainly due to buoyant trading in the A-share market. On the other hand, several factors led to a decline in revenue. These include net cash from operating activities, which decreased by -249.97% from 2024 to 2025. Medium-term notes declined by -0.2%, private placement notes declined by -36.3%, and short-term financing bonds declined by -15.1%. Interest income also declined by -5.71% due to a decline in market interest rates. Investment and trading business declined by -1.95%, with a decrease in revenue from fixed-income investments, while others declined by -21.73%. In summary, the primary drivers of revenue growth or decline can be attributed to various factors, including agency trading, total revenue, profit for the year attributable to shareholders, equity business, and market share in central and state-owned enterprises. Conversely, a decline in revenue was driven by net cash from operating activities, medium-term notes, private placement notes, short-term financing bonds, interest income, investment and trading business, and others. Net income and profit margins have undergone significant changes in recent years. Initially, net income increased by a substantial 44% to RMB 10.24 billion, reaching historic highs. This upward trend continued for 3 consecutive years, with an 18.91% year-on-year increase to RMB 12.35 billion. However, there was a notable decrease of RMB 7,299.74 million. Profit margins also experienced fluctuations. Despite maintaining a leading position among major comprehensive securities firms, profit margins further increased year-on-year by 1.12 percentage points to 9.94%. Nevertheless, some business segments, such as investment and trading, saw a decline in profit margins of -4.93% and others by -1.07%. The reasons behind these changes are multifaceted. The strong profitability and market competitiveness of core businesses contributed significantly to the increase in net income and profit margins. Additionally, breakthrough progress in key transformation initiatives like digitalization, synergy of core businesses, and wealth management played a crucial role. Furthermore, the accelerated construction of an integrated service system for institutional clients also had a positive impact. However, the revised cash dividend policy may have led to a decrease in net income. The company's operating cash flow has been a subject of mixed results in the provided summaries. While there are instances where the company generates negative operating cash flow, such as on pages 34, 70, and 74, with net cash from operating activities ranging from -33,384,021 to 29,644,770 RMB. There are also several instances where it is generating positive operating cash flow. On pages 294, 295, 297, 298, 299, 300, 302, 303, 305, 306, 308, and 309, the company's operating cash flow is reported as positive. Additionally, on page 472, it is stated that the company generated a net cash from operating activities of $9,186,005 in 2025. Furthermore, pages 331 and 336 also report positive operating cash flows for 2024 and 2025. However, it's worth noting that there are instances where the company's operating expenses are high, which could lead to negative operating cash flow, page 385. Nevertheless, based on the overall summaries provided, it appears that the company is generating positive operating cash flow in several instances. The company's debt level has experienced fluctuations over the years, but some significant changes have been noted. On page 58, it is reported that the debt level increased by 21.33% to RMB 517.49 billion. However, on page 378 and 452, no significant changes in debt levels were reported. A more recent change was observed on page 454, where the total debt has increased from 2024 to 2025 by RMB 6,077,343. In contrast, interest expenses have shown a decline in some instances. On pages 72 and 336, it is mentioned that interest expenses decreased by 15.51% and 15.1%, respectively. Additionally, on page 384, interest expenses decreased from 2024 to 2025 by RMB 377,787. However, on page 476, a conflicting report states that interest expenses increased by 9% from RMB 8.39 billion to RMB 9.15 billion. The inconsistency in the reports highlights the complexity of the company's financial situation. While some areas show significant increases or decreases, others remain unchanged or exhibit contradictory trends. The financial performance of various regions and segments has been analyzed. The Beijing-Tianjin-Hebei cluster, Yangtze River Delta, Greater Bay Area, Hong Kong market, and the Chinese mainland all performed well. These regions contributed positively to the overall financial results. In terms of specific business segments, wealth management and institutional business, investment management and trading, and investment banking also showed strong performance. However, it is worth noting that the investment banking segment reported a significant loss of -$552,790. On the other hand, outside the Chinese mainland and the others segment appear to have underperformed. These regions or segments may require further attention to improve their financial results. Management is outlining a comprehensive strategy for the company's growth and development. The primary goal is to establish a leading investment bank in China by advancing high-quality development during the 15th five-year plan period. To achieve this, key transformation initiatives such as digitalization, synergy, and upgrading core businesses will be prioritized. The company aims to build a strong financial country and accelerate its pace by focusing on serving the development of new quality productive forces. Leveraging professional advantages is also expected to drive growth. Furthermore, management plans to create business value through advanced technology during the 15th five-year plan period. In terms of specific actions, the company will distribute cash dividends and authorize interim profit distribution for 2026. Additionally, adjustments will be made to the debt structure, with a focus on repaying due debts and supplementing working capital. The company also plans to use bond proceeds to support sci-tech innovation sectors through investments and market-making business. Overall, management's strategy is centered around driving growth, improving governance, and creating value for stakeholders. By prioritizing key transformation initiatives and leveraging professional advantages, the company aims to establish itself as a leading investment bank in China. The company has a history of distributing profits to its shareholders through dividends. In fact, it has paid out a significant amount of RMB 4.313 billion in dividends. This indicates that the company is committed to rewarding its investors with a portion of its earnings. Furthermore, the accumulated cash dividends for the latest 3 financial years total RMB 11 billion, 288 million, 91,794.18, demonstrating a consistent trend of dividend payments. On the other hand, the company has not engaged in share buybacks or cancellations over the past 3 financial years. This suggests that management is prioritizing dividend payments and reinvesting profits within the business, rather than returning capital to shareholders through share repurchases. That concludes the financial summary for China Merchants Securities Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.